Everybody, this is Bill Paulus. Good morning, good afternoon, good evening, wherever you may be. Can you hear me all right? Just give me some feedback. Yes, yes. Thank you very much. Very good. Well, I want to welcome everybody to the call today. You're in for a rare treat. We have Steve Nison, president of candlecharts.com, with us, and I hope everybody's ready for some really breakthrough knowledge that Steve's going to share with us tonight. Now, Steve is the acknowledged foremost expert on candlestick trading, as many of you know. And, you know, many of you may not know, Steve is one of the one who introduced Japanese candlestick trading to the Western world. Now, that's pretty significant. There's a lot of material out there on candlesticks, but this is the guy that introduced candlestick trading and charting to the Western world. And what I like best about Steve's trading style is the fact that he integrates Japanese candlesticks with Western technical analysis. And believe me, that can create a powerful edge that few traders have when trading the markets. Now, Steve's work's been highlighted in the Wall Street Journal, Institutional Investor, and even Barron's. And many of you know he is a sought-after speaker. He's presented his trading strategies to traders worldwide. And, you know, he doesn't just show you how to apply the concepts. He shows you how to profit from them. And that's a big difference. He's also lectured at numerous universities, even at the World Bank and the Federal Reserve. Now, you all know today's markets are really volatile. The competition's fierce. And frankly, I believe you need a weapon that'll let you spot reversals, which Steve will show you how to do, before other traders see them. That's really key. And so today, Steve's going to reveal how candlestick charting techniques can be that added weapon for trading success. So I urge you to listen carefully and learn from the guy who started it all. Steve, I'm going to turn it over to you.
Thanks so much, Bill. And yes, it's interesting. You had mentioned that candlesticks can be found everywhere, and it's really amazing if you think about it. Before I wrote my first book back in 1989, there was not one charting system anywhere in America or Europe that had a candlestick chart. And now every charting package has candlesticks. And thousands and thousands of traders are making money when they properly use candlestick charts. And just to give you a sense, and I know Bill had alluded to this, but probably the most prestigious and important financial journal in the U.S., the Wall Street Journal, Japan's Candlesticks Lights Trader's Path. And the second quote is particularly interesting because it brings out a very important aspect, that no matter what time frame you're trading with, whether it's intraday, daily, you can use candlestick charts. And you can also use them in any markets. In fact, Bill, gave you a little background about my work. Let me get to know a little bit about you. So I'm going to put up a question here. I'd like to know what the main markets that you trade. And you see on the right side of the slide. And we'll just give it a second or two. And again, you could type it in. You could look at the survey. You could just just click your answer. Okay, very interesting. Okay, so it looks like about an equal mix of equities and Forex and a large percentage of option traders. So thanks for the feedback on that. And everything we'll be doing today can be used in any of these markets. There are some nuances in the Forex markets. I'll just make brief reference to it because I really wasn't planning on doing that today. But since there's such a large percentage of you who do trade Forex, I'll make a brief reference to it. But I really want to, congratulate you for coming today. And let me explain why. Let me show you this cartoon or this graph, this picture. And it's us versus the market, and sometimes we might feel this way, right? A big bullseye on your backside. And the reason, some of us may feel like at times we have a bullseye in the back is, we feel the market's after us, or we miss great market signals. We see them after the market makes its move. But, how many of you would be a much better trader if you were able to quickly pinpoint entry and exit signals? Now, what is it that causes people to miss money-making trades? Sometimes it is bad luck. But from my experience with dealing with thousands of retail and institutional traders, almost all the time it's because the trader missed seeing a golden opportunity or did not have the confidence to take advantage of the opportunity. What brings more confidence? What lets you pinpoint entry and exit signals? In other words, what helps you make more money trading? It's education, and that is the theme of the session, and that's why I'm so pleased to be working with Profits Run, because they, like our shop, CandleCharts.com, really value education, and that's why I want to congratulate you for giving up a Saturday morning, or depending where you are, Saturday afternoon, or maybe even later in the day on Saturday, to come to the session, because while this is a no-fee session, there is a cost involved, and the cost is your time. So I want to congratulate you on valuing the investment, or taking the investment in the education by giving up a little time. And the Japanese, I'll be interspersing a lot of Japanese proverbs. Most of the seminars I do for institutional clients, so my seminars have not only better be informative and giving profit-making ideas, but also entertaining, because it's at the end of the session, at the end of the day, when the traders are really, really tired. So I'll throw in Japanese proverbs. So, for example, here, deep roots are essential for a tall tree, and your roots to a deeply successful trading career is education. And my feeling is the market is like a bad neighborhood. You don't want to go there by yourself. And your best ally is education. We're going to start down the path of candlestick knowledge today. All right, the session title is Candlestick Charting Basics. It's not Advanced Candlestick Charts. But for those who have my other resources, for example, I know many of you have my book, but all my newest candlestick information is really revealed only in my live seminars, my full-day seminars, or my other educational resources. We'll talk about that a little at the end of the session. But we'll throw in some advanced strategies during the session. But the idea is that usually when I do a session like this, and unfortunately as much as I like doing these, I just don't have time to do many. So that's why I'm glad to be working with Profits Run, because I'm lucky. I'm in a position where I could choose who I work with. And as I mentioned before, they, like me, really believe in education. So with that in mind, we won't be able to go over what cost me 30 years experience and hundreds of thousands of dollars in costs, but we will start down the path of education today. And one of the questions I'm asked is, how did I learn about the candlesticks? And just very briefly, my jobs before I had my own shop was giving trading recommendations at the brokerage houses. So I'd work for Merrill Lynch, E.F. Hutton, Shearson Lehman, and so forth. And when I was doing the research into the candles in the 1980s, my trading recommendations became more and more based on candlesticks. And what happened was the traders, the brokers who used the trading recommendations, what I found was the feedback was they were getting in trades not only earlier and more successfully because they were able to catch the moves before the market made the big moves, but equally important, we helped the brokers avoid losing trades. And we're going to talk about and look at real-world examples, recent real-world examples of how the candles shine at not only letting you get into trades early before the other traders see them, but also helping you keep more money in your pocket by avoiding losing trades. And just to give you a sense, this was my P&L, and what happened was, this is when actually about the time my first book came out. So all my strategies given to the brokers were based on candles. And you notice that, okay, I had the best P&L of all the traders at the shop at that time. And it was purely because of candles and also risk management. We'll touch very briefly on risk management. We don't have time to get into that today, but notice something interesting here. I had more losses than wins. And the most successful traders, this is very common. How can you have more losses than wins and yet have a good P&L? By the judicious use of stops and trade management. And we'll touch a little bit on that towards the end of the session. In fact, I'll be revealing my all-time most important trading rule as far as trading discipline is concerned towards the end of this session. Now, I do ask a favor, though, and I appreciate, Bill and I can see your questions and your comments, although you can't see each other's because we really want you to focus on the slides. So as you have been doing, and I appreciate that, hold off on questions until the end of the seminar because I will stay around to answer some questions. I don't have time to really look at the questions now as I'm doing the presentation, so thanks for your help on that. Now what we're going to do is go over the essentials of candlestick charts. I know many of you are aware of how to make a candlestick chart, but usually in a seminar like this, I would say anywhere from 3 to 5% don't know how to make a candlestick chart. They're using a bar chart. And for those who are using bar charts, you are trading very, very dangerously. I'll show you some of the major advantages of that candlesticks have over bar charts and why at the end of the seminars, I've done seminars for thousands and thousands of traders, and many times I'll ask, even when I do an hour seminar, a 45-minute seminar, I'll ask who here would ever go back to a bar chart. And in all the years I have been doing this, not one person has ever raised their hand, not one. And especially for those new to candles, I think you'll see why that's the case. So the candlestick line, and by the way, although a lot of this may be review for those who are familiar with the candles, you may pick up little nuances. And look, there's nothing wrong with going over the basics. Again, there might be some things you forgot, and especially for those. And Bill had made reference to this, and I'll make a little reference to this later on in the session. For those who got their candlestick information elsewhere, be very, very wary, be very careful, because there's a lot of information out there that is not correct. Everything I'll be showing today has been confirmed by at least 2 or 3 separate Japanese sources, whether they were books I had translated or it's Japanese traders working at the major financial firms in Japan. In fact, one of my best sources initially was a Japanese broker. He was using candles. His father was using candlesticks, and his grandfather was using candlesticks. So candlesticks have a pedigree, and the pedigree is very important because there are some candlestick signals that others are making up out there and have no idea where they got them from, folks. Everything I'm revealing today has been honed and refined by generations of use. So we'll just do a kind of candles. We'll do this very quickly because most of you are familiar with this, but again, many of you may not be. So there's 2 portions of the candlestick line. There's the real body. That's the rectangular portion of the candlestick line. And the real body can be black or white. A white real body means that the close of the session, see, the real body compares the open and the closing. So a white real body means that the close is over the open. A black real body, and it doesn't matter what time frame you're looking at. This could be a daily chart, a 5-minute chart, it doesn't matter. A black real body means that the close is under the open. Now, the lines above and below the real body are called the shadows. So the top of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. So what that means is that the same data points, open, high, low, and close, that you need to make a bar chart is exactly the same data, the same information you need to make a candlestick chart. Now, think about what this means. It means that every strategy you've learned with Profits Run, every strategy with Western Technicals you've learned elsewhere, every option strategy you've learned, moving averages, trend lines, volatility, it doesn't matter. You could still use. And now, by starting to add, if you haven't already, the insights of the candles to confirm these other signals, you're going to greatly increase the likelihood of the trade working out. And we're going to look at some real world examples of how this works. So this is all there is to draw the candlestick line. Don't let the simplicity fool you. Very simple to draw, but extremely powerful in analysis. And you're going to see a sense of that. Even with single candlestick lines, you're not going to believe how much information, when you understand how to use the candles correctly, the information that the candles relay. As the real body gets smaller and smaller, we wind up with doji. These look like crosses. The dojis when the opening and closing are the same. And we'll look at doji in a couple of minutes. But essentially, as a general rule, the smaller the real body gets, okay, so I'm shrinking the white real body. The smaller the white real body gets, the weaker the preceding trend should be. Now, I'm going to show you how just even understanding looking at the real body can keep money in your pocket. Sure, why not? Okay, this is a bar chart. And although it's an equity market, everything we'll be doing today can be used in Forex and so forth. Now, the market's making higher highs, higher lows, and higher closes. So on a bar chart perspective, it looks healthy. Now, if you remember, a couple of minutes ago I said if you're using a bar chart, you're trading dangerously. Let me show you why. We're going to take the same data as on this bar chart, and we're going to make it into a candlestick chart. Now, first of all, notice how it takes a bland, dull, two-dimensional bar chart. This is kind of like a black and white TV. And this is like a plasma TV where the prices, the visual images just jump off the screen at you. But yes, it may be visually stimulating, but more than that, and this is what it means to your pocketbook, the candles give you twice the information as the bar chart, because the candle lines show us the price like the bar chart does, but the true power, when you understand how to use candles, is they show you the force behind the move, or the lack of force behind the move. And with that latter aspect in mind, the market is moving up in that red ellipse, but look at those real bodies. They're getting smaller, they're very small, and what that's showing us is that there's a tug of war between the bulls and the bears. What that means, the market's message is telling us, because the candles tell us what's going on between the battle between the bulls and the bears. What it's showing us is there's more of an equilibrium between the bulls and the bears. What does that mean? There's less likelihood of the market continuing its rally. When I see something like this, my strong suggestion is do not add to long positions. I wouldn't sell short because indeed the market is moving higher, but equally important knowing what not to do, and this is what unfolded after. So by doing this, you saved at least $5 per share by not adding to long positions up here. Let those who don't even know how to begin to use the basics of candles be buying up there just at the wrong time. So if you're looking at $5 a share, minimum 100 shares, you looked at saving just $500. Because, at the end of the day, it's not only how much you made, and we'll show you some strategies, some basic strategies on how you could use candlesticks to make money, but it's also what you didn't lose, because it's all added together. The highs in Apple, made with a series of small real bodies. Once again, I'd be reluctant to sell short up there because no true bearish candlestick signals, but remember, the candle shows twice the information, so although Apple was holding nicely up there, look at those diminutive real bodies, time after time after time. And if you were long, this would be a great time to take profits. Candles, especially when you have the complete knowledge, you're going to be able to see how candles will let you exit trades. There's lots of information about, using strategies to enter positions, but then you're on your own. How do you know when to exit? Candles are great for exiting. So, for example, if I see a doji or small real bodies like this, I would certainly use that as a time to think about taking some profits, or at a minimum, not to go long. Now, even single candlestick lines relay tons of visual information. So this is called the hammer. The hammer is a very long lower shadow, small real body at the top end of the trading range. The real body can be black or white. The important aspect is this. The lower shadow really has to be twice the height of the real body. And as I mentioned before, the candles are extremely easy to draw, but the power of the candles is they show you the psychology behind the market. So let's think about what's going on with the hammer. The market, let's say the white real body. So we know the market opened here. It sold off during the session. Now, if the market was weak, shouldn't the market have closed on the lows? What happened by the end of the session? Whether the session was a 10-minute, a 30-minute, or a daily chart, or even a weekly. What happened by the end of the session? That's right. It had bounced back to close at or near the highs of the session. Even if it was a black real body, it was a vibrant retreat from lower prices. So what's happening in this one session is that the bears are getting nervous because the market visually showed us it rejected lower levels, and the bulls are starting to get a little bit more confident. This is the power of the candles. We get potential reversal signals in as little as 1, 2, or 3 sessions. So, for example, here, just a couple of weeks ago, okay, the lows made in this equity was a classic hammer. Okay, in fact, look at this. It was almost the open, the high, and the close were almost all at the high of the session. This is actually called, by the way, this is called a dragonfly doji because it looks like a dragonfly. If any of you remember as kids with the dragonflies, what a dragonfly looks like with the wings up here. Anyway, this is a really good potential reversal signal. So it's a hammer, and the hammer must come after a downtrend. We'll look at the importance of that. We'll keep that in mind. There's going to be a lot of things we don't have, a lot of aspects that we don't have time to go through today. I teach do 2 days on candles and combining candles with Western technicals and trade management. We're going to be looking at 45 minutes or an hour. So here we have a hammer, and since the hammer, the market rallied $10. So again, if you're looking at 100 shares, you're looking at $1,000 in your pocket. And interestingly, let me show you something else on this stock. Another hammer. Now, I had mentioned in the introduction that while we're going over the basics of candles, I'll bring up some nuances. And what you could do is use many of these candlestick signals, not all of them, but many of them, as a potential support or resistance area. And what's great about that is that you can now set a stop-out area. So the low of the hammer should be a support level. So if you buy in the hammer, you must be willing to risk to the low of the hammer as a potential support. And look how nicely that held as support. So even if you did not buy on this hammer, this one, especially after multiple tests, you may have thought about buying down here. While you would have made $10 on this particular rally, here you're looking at $6 over here if you bought on the hammer. Not a shabby trade. Now, one of the little bit more advanced and secret strategies is that very often the low of the hammer is tested. So let me go back to the prior slide. See how the low of this hammer was tested as support? Here, we saw the highs in Apple a couple of slides ago, made at $204 a few months ago. Let me show you how the candles call the lows a major low in Apple back in February of 07. Okay, what candlestick signal do we have at the arrow? And you don't have to type it in. You mentally think about it. Classic hammer. The low of the hammer should be support, as indeed it was. So, notice, and this is very typical, very often the market might rally a little bit after the hammer or trade sideways, but very often it'll get into the lower shadow. And what's great about that is by the market doing that, it's expanding on a base. Okay, the bigger the base, the better the rally. The Japanese say, as far as bases are concerned, ice 3 feet deep is not built in a day. So I really like it when a hammer is retested. So your secret strategy of the day is that the market will often retest the hammer's lower shadow, usually within the lower part, the lower 50% of the hammer. Now, almost every bullish candlestick signal has a bearish counterpart. And the bearish counterpart of the hammer, doesn't this look bearish? The shooting star? Look at that extended upper shadow. What do you think happened during the session? The market rallied. Were the bulls able to sustain these higher levels? Of course not. The market rallied and then sold off. Do you think the bulls are getting a little bit nervous after the session? Certainly. So the shooting star is a potential top reversal signal. The Japanese would say the market's rejecting higher levels. And when you get a group of signals together, so for example, in this particular market, and this is from late 07, but all the other slides I'm showing you from today, for today, are all current charts. This one's a couple of months old, but I wanted to bring this out, an important point here. These red candlestick signals are shooting stars. The high of the shooting star should become resistance. But even if this was not a shooting star here, we would still have a resistance zone shown by those two black horizontal lines. And classic shooting star here, you would be all over this trade, or should be from the short side, because the market was confirming a resistance area. Would those black horizontal lines be resistance on the bar chart? You all should be mentally saying yes. Is it a resistance area on a candlestick chart? Definitely. And keep this in mind. Write this down. Whatever you do with classic bar charts, use with candlesticks, but now you have the extra information, and information is power, that you have a shooting star confirming a resistance area. Great short sale opportunity. The Japanese will say, if heaven drops a fig, open your mouth. This is one of those times. Now, both Bill and I had mentioned about the danger of the misuses of candles and being careful where you get your candlestick information. By the way, I had the slide made up. I forgot about this. And the reason I like this slide is because what we're doing in this seminar, in this basic seminar, again, just starting you down the path of education, is we want to get the odds on your side. That's what trading is all about. There is nothing 100%. And you don't want to feel like this, right? The New York Stock Exchange. And by beginning to correctly harness the power of candles, like we saw here, especially when it confirms a Western signal, you're getting the probability hugely on your side. But getting back to the idea about being careful about where you get your candlestick knowledge. Okay, I spent years and years, since the mid-'80s, and thousands, and if not hundreds of thousands of dollars, uncovering what I call these secrets of the Orient. And this will show you this is my research desk here. And these are just some of the Japanese books I've had translated. And you get in the middle here, okay, this binder, these are all translations. And to give you a sense, each one of these pages, actually about a third of a page, something like this, is about $66 to translate. So each page, you're looking probably about $175, $200 to translate. And that doesn't take into account finding the resources, corroborating everything with other Japanese sources, looking at hundreds, if not thousands, of charts to see which strategies work and which ones don't work, and on and on. So, you know, it's great. A lot of the people who use candles, even written other books, are nice enough to give me credit. But there are a lot out there. We actually had to sue somebody. We actually won a lawsuit for plagiarism for somebody who actually copied my work literally verbatim and didn't give me credit. And that was a little annoying considering how much time and effort I put into this. But let me share an example. I didn't want to embarrass the author, but this is actually a section of a book, and they had this as a shooting star. Okay, what's wrong with this shooting star? Why would this not be a shooting star? Think about one of the most important aspects of the shooting star. What is a shooting star supposed to relay from us? That there's a very long, and I'll give you a hint, and great, most of you are getting that. Look at the upper shadow. Great. Okay, you're all getting this. See how you're starting to gain the knowledge and to become more confident? Right. The upper shadow should be multiple times the height of the real body because you visually want to see a rejection of higher levels. So here, the real body and the upper shadow about the same size. There's no way that's a shooting star. And what's really disconcerting about this is that there's nothing more basic than being able to understand what the shooting stars should be hinting at. And the author didn't even get that right. So I want to congratulate you for coming to the source of candlesticks. Somebody from one of my seminars sent me an email after the seminar, and he made a nice comment. He said, "Everyone quotes the master. Why not go to the master?" So, I thanked him very much for that. And when you have a correct shooting star, once again, you get the probability on your side. So here in this particular stock, classic shooting star. I have some of my favorite Western tools. Again, I'll just touch on one of them because of time constraints. But I really like it when the market breaks above a resistance area and fails to hold above resistance. I call that a falling off the roof, because the Japanese say, let him climb the roof and then take away the ladder. And I'll make reference on how you can get some of my favorite Western signals, again, towards the end of the session. But here we had the failure to hold above a resistance area, and as far as the candles are concerned, a classic shooting star. So you're looking at a 40% drop since the advent of a correct shooting star. Okay, this is a classic shooting star. Now, most of the candlestick signals are made of more than one candlestick line, and one of the more popular and successful are the engulfing patterns. A bullish engulfing pattern is when the market is moving south, as shown by the red arrow, and then a white real body engulfs, hence the name, a black real body. And the bulls are taking control of the market from the bears. Think about the visual nature of what the candles are showing us. Who's taking control from whom? That's right, the bulls are taking control of the market from the bears. And if you use volume, and I use volume all the time for equities, wouldn't we want to see a high volume? I'm making volume on the bottom here. Wouldn't we want to see high volume on the white candle and lighter volume on the black real body to give us extra confidence of the trade working out? Sure. So keep this in the back of your mind. Although this basic session is focusing on the candles, it's only part of the picture. Okay, because if you have a candlestick signal confirming a Western signal, you greatly increase the chance of the trade working out. And a bearish engulfing pattern, not surprisingly, the market is in an uptrend, and then the bears grab control of the market from the bulls. This is the core. Let me give you a second or two to read this. This is what it's all about. This is one of the book section from one of the books I had translated, and it's just absolutely perfect for why candles work, why they're valid, why the top traders use them. I know that because I teach the top institutional traders. Because it shows the direction of the market, and this is important, and the investors or traders psychological conflicts at important turning points. This is the secret why candles are so potent, and as Bill mentioned, why they create such a powerful edge to your trading. Let me show you a case in point here. Okay, let's look at this popular stock among day traders and short-term traders. Notice the blue arrow. The market is moving up. But what's happening to the real bodies? What gives us a hint that the prior trend, in other words, the uptrend, is losing momentum? Great, that's right, smaller real bodies. Now let's look at, and see, this is what I mean by the candles reflecting the psychology or the mood and the manner of the market. Now in the green arrow, the market is getting better, is descending, but do you think the bears really have control of the market? Of course not. Look at those diminutive real bodies. So although the market's descending, those small real bodies show us, the mood of the market, the bears really don't have control. And then, look what we get here. Little downtrend. That's a hammer. The low of the hammer became support. And then, anybody recognize a candlestick? And let me clear this off here. And let me see if we can do a question here. Okay, anybody see a pattern, and I'm putting a polling question up, after the hammer confirming support? And I'm going to share I'm not going to share the results yet because then you'll all get it. Okay, so we're talking about after the hammer. Great, and we'll share the results now. Great, and it looks like, see how confident you're becoming already? Once again, even something as basic as this. Great. No changing answers. Great. Great call on that. Okay, and you're correct. It was a bullish engulfing pattern. And by the way, the law of the bullish engulfing pattern should also become support. Another great trading opportunity. So there we're looking at a rally. It's a little hard to see here from 280 to about 360. I would probably use this to get out of the trade. A shooting star up there. Now remember, as I mentioned before, candles are great not only for entering but exiting. So, you know, you buy in the bullish engulfing pattern around 285. You exit in the close of the shooting star around 350. You know, again, you're looking at, what, $70 in your pocket. So, once again, we're just starting down the path of education. The focus here is not to have you become a candlestick expert. In fact, be very, very careful. Do not trade unlimited information I'm relaying here because you will get burnt with the candles. We're just starting down the path of education. For those who have my books, the books will take you on a knowledge level from 1 to 10 to about a 2. I'm taking you to about a level 1 here. So the idea is to show you how easy it is to think about adding candles to your favorite trading tools. So we're beginning to harness the power of the candles. And I had mentioned in the prior slide, the lower the bullish engulfing pattern becomes support. So here in eBay, the low of the bullish engulfing pattern became a support area. So if you bought in the bullish engulfing pattern, your stop should be on a close under the low of the bullish engulfing pattern. Okay, when correctly used, many of these candlestick signals can be used as support or resistance. And it doesn't matter if this is a popular stock, obviously, eBay. It doesn't matter if it's a Forex market. So here, the low of the bullish engulfing pattern became a support area. Now, as promised at the beginning of the seminar, although this is really not, a session on Forex, there is a little nuance with the Forex markets because the Forex market is a 24-hour market. It's okay if the opening of the white candle is the same as the close of the black real body. Okay, normally, for a non-Forex bullish engulfing pattern, let me go back to a pattern for the prior slide, you'll see how the market will gap down on the opening, so have a lower opening under the prior close. So we're a little bit more flexible with the Forex markets, with the candlestick signals, than we are with non-Forex. But nonetheless, the same strategy, the lower the bullish engulfing pattern should become support. And just as you can trade with the candlesticks with Forex, and in fact, Forex is a perfect vehicle for candlesticks because the highest percentage of technical analysts, without a doubt, in any market is Forex. Okay, because that's the fastest way. I mean, think about the fundamentals in the Forex market. You have to look at all the interest rate relationships, the politics of each country, what the central banks are doing or not doing, and the easiest and fastest way, looking at all that information, is through the charts. And also, most FX traders are very short-term oriented, and the shorter the time frame, the more important the emotional aspect of the market becomes, and the only way to gauge the psychological or the emotional aspect of the market is through charts. There's no other way of doing it. The longer your time investment is, if you're looking at, holding an investment for months and months, I strongly encourage you to continue to follow the fundamentals beside the technicals. But if you're getting into intraday or swing trading where you're only going to trade for a couple of weeks, technicals are the key. Doesn't mean you trade. If there's an important economic number coming out, I don't recommend trading in front of it because, as shown by the slide before, we want odds on our side. And if you're trading in front of an important number, to me that's a coin flip, a 50-50 coin flip. And we'll look at some interesting ways on how to use fundamental news a little later in the seminar. Now, so here we could use, I showed you an example of how we could use it in Forex. A large percentage of you are option traders. Certainly everything we're doing today and all my educational resources can be used with options. And I've done a lot of joint seminars with Price as well as Larry McMillan, big names in the options world. And what's great about candles and options is candles set up the timing for the potential trades. It gives you the opportunity, and then you can shift over to your option strategies. Okay, so candles and options, perfect fit. The Japanese say, like the right hand helping the left hand. So back to the engulfing patterns. Here we have a bearish engulfing pattern where the black real body wraps around the white real body. And what was particularly ominous about that is notice how it confirmed a resistance area. And we're going to be looking at this slide in a couple of minutes again. Now, I had mentioned that all of my books, I think my books are a great basic source of information, but nothing more than that, because when I wrote my books, I was working at brokerage firms and I had a salary. So I didn't mind revealing all my information in the books, but since I have my shop since 1996, that's not the case now. All my newest information is outside my books. And I have about 14 Nison trading principles. These are core trading principles, and the reason I wanted to mention my books is because you won't find them in my books. These are the foundation for trading success that I've derived, and I've narrowed them down to about 14, derived from my years and years of looking at, I can't tell you how many charts, and dealing with institutional traders and having an advisory service and so forth. And one of the trading principles happens to be number 10 of the 14. And by the way, they're not in importance order. Okay, and this is something I had made reference to before. The more signals we have joined together, the greater the odds in our favor. So, thinking about this, nothing more basic than resistance on the bar chart. And let me show you how easy it is to combine what I showed here on the title of the slide, East and West. East obviously is candles. West means Western technicals, moving averages, trend lines, and so forth. On the left side of the slide, we had shown the stock early in the session. These are spinning. The Japanese call small wheel bodies spinning tops. They look like tops we played with when we were kids. The Japanese are great. They use a lot of metaphors and analogies. And actually, the plus part of that is it makes my seminars more interesting because there are lots of good things to talk about. The challenge was, and this is why it took me so many years to uncover all these secrets of the candles, is because to really understand the candles, the Japanese do everything by metaphor and analogies. So I had to read a lot about Japanese history, about Japanese culture, so I could understand the references that they made to a lot of their candlestick signals. And with that in mind, so they call these spinning tops because the small wheel bodies are representative of the tops we played with when we were kids. So these small wheel bodies are showing us the market is losing momentum. And so I show that on the right side of the slide here, and notice why those spinning tops took on a more ominous nature. In fact, for those who are visually alert, anybody recognize this candlestick signal here? This would be a great selling opportunity because normally I would not suggest going short on a candlestick signal unless it confirms something else. But look at this. Anybody recognize that candlestick signal? And I'm going to do it over here. And just make it a little easier. Whoops. Yes, it's a bearish engulfing pattern. Great call. So are we getting a little bit more confident now? Are we starting to gain the knowledge? It's a bearish engulfing pattern. It's not, somebody said an evening star. It's not quite an evening star. Again, that's one of the candle signals we're not talking about here. But this is one of those, if heaven drops a fig, because look at this trading opportunity. We had a shooting star confirming resistance. And I'll just clear this off. I would have a stop up here, and boy, my minimum target would be down here. So again, are we learning at least one thing so far that should help you avoid losing trades or help let you get into a trade early? Hopefully the answer is yes. So here we have a bearish engulfing pattern confirming a resistance area. Now, so far we've just touched, we may go on a little more than an hour, so I hope you can stay with me here. So I have a lot of cool stuff. We'll talk about current markets and so forth. So we talked about candlestick signals. We've touched on it. Again, we haven't talked about a lot of the patterns, the morning star, the evening star, the high wave candle, and so forth. But it's not only the candles. This is a quote from a book that I had, and this is a great phrase. To know where you stand is as important as the candlestick pattern recognition. And I had this cartoon made up. Okay, it says you must learn to use the tools properly. And what that means is that, and this is really, really important, this is one of the, okay, it looks like the sound, okay, let me see. Okay, one of the things to keep in mind, and for those who are having sound issues, let me just type in here. Sorry, because the sound is fine over here. I'm also running as a guest, so if there's any sound issues, unfortunately it's on your end. So here, keep this in mind. One of the greatest misuses of candles is people will buy or sell on every candlestick signal. And thanks for the feedback on for those who letting me know the sound is good. You cannot trade on candles by themselves. Okay, they're a tool, they're not a trading system. Okay, a trading system includes using candles and Western technicals and trade management. And we're going to look at this aspect, one of the aspects of trade management, in the next slide. And this brings me to my all-time most important trading rule. And that is, one always has to consider the risk-reward of a trade. Let me show you a case in point. Here, on the left side, we have a bullish engulfing pattern, and then we have two bearish engulfing patterns. Okay, this is 4x. Once again, the same concept. Because of where the forex, the engulfing patterns emerge, we would trade very, very differently with them. With the bearish engulfing pattern 1, okay, we could think about selling short, especially if it confirms resistance, or at a minimum exit longs. Look at bearish engulfing pattern 2. Okay, I don't know if I said 1, but bearish engulfing pattern 2. Let's look at bearish engulfing pattern 1. Think about this, and if you sold on this bearish engulfing pattern, look at where you would have sold. Right at a support area. So what that means is that if you buy or sell on every candlestick signal, what that means is you will get burnt with the candles. You cannot test, you cannot trade on candles alone. They always have to be viewed through the prism of overall market conditions, and one of those conditions is risk-reward. So as I showed here, and the reason we like this slide so much, who does this truly handsome dude, who does the guy look like? A little like me, right? That's right, my twin, yeah. We're not related, but we got this and we got a real chuckle out of it. So, yeah, well, Groucho Marx, put a little cigar in my mouth or his, and we have Groucho. And so here, guy, he mentioned, making some nice money. But what I like about this, he did the trade because it had a good risk-reward, okay, of 3 to 1. In other words, it really should have been reward to risk. His profit potential was 3 times his risk. So whenever you're thinking of doing a trade, you should really think about the risk-reward. So let me show you, and we'll look at some more markets, but how you're starting to own the knowledge now. With the idea that the candles reflect what's going on between the battle of the bulls and the bears. So let's look at what happens when prices get down between 62 and about 61.50. So, first of all, okay, we have a long lower shadow here. Okay, that's not a hammer because the upper shadow is too long. Now, what pattern do we have on that second red arrow? Okay, I'll give you a second or two to think about it. And once again, we're not sharing results because we want to make sure, but it looks like just about everybody's getting it. Great. Super. Right. A bullish engulfing pattern. See how simple this is? Great. And let me show you the real kicker here. Okay, and we're going to do this again. We're going to start again. Okay, so you should have the thing, the pole on there. The third arrow, which is going to appear now. Okay, what signal is that? And feel free to put down another signal because if I'll go through it. If it's a wrong signal, I'll explain why it's not a particular signal. Okay, it's not a bearish engulfing pattern. Remember, bearish engulfing pattern is when a black candle wraps around a white real body. It's not a shooting star. Great. It's a trend. It's a beautiful hammer. Remember, the hammer could have a black or white real body. So let me share the results here. Great call on that. See how you're beginning to get more confident? And it's not what confidence means. Education equals confidence equals trading success. And let me show you this. If you saw this hammer, your risk is to the bottom of the hammer, and the hammer can be a black or white real body. Where would an obvious, if you buy this hammer, the low of the hammer is a potential stop out level. Where's an obvious target? The recent highs. Up here. So if you bought on that hammer, you would have made $1.70 per share in 2 sessions. Just by understanding the basics of candles. And same concept here. Okay, let me show you what the candles reflect, how we could read the market's message. In the low of the S&P, we had a classic bullish engulfing pattern shown by the red semicircle. The low of the bullish engulfing pattern becomes support based on a close. It's okay for the market to close under it. And then, on this session here, that was the Bear Stearns collapse. And yet the market failed to hold under the low of the bullish engulfing pattern. And this was a major turning signal to me. And not only was this a bullish engulfing pattern here, but look at those lower shadows. What was the market telling us? Sure, that it was rejecting those lower levels. And this was a major low. And if you had the candlestick knowledge, you would have been thinking about at least not being short there. But this was the turning signal, folks. And on the day after the Bear Stearns collapse, the market had a bullish engulfing pattern. So once again, we're getting a little bit more confident. You see, does this make sense to you? How understanding the candles could put money in your trading account, both from a perspective of adding money and making sure you keep it there. So let's go on some recent action here. This is as of about 3 o'clock on Friday. It's a doji here, but that doesn't mean that much to me. Once again, because of the scope of this session, we don't have time to go into my favorite Western technicals. But one of the things I like looking at is old resistance becoming support. So the market broke out of a 150-point trading range. That to me is a big positive. And yes, it's a doji here, but that doesn't matter. If I would only get nervous from a short-term perspective if the market closes under here. Okay, so I am positive in the market. We do have some resistance over here, if the high is over here, and then the next resistance area here, about 1,500. But I think we put a major base in place here, and this old resistance should become a support area in spite of the doji. And so are we getting a little bit more confidence here? But I guess the question is, how many of you can use more confidence? Whoops. How many more of you can use more confidence trading? Yes, yes, and yes. And it's great, for those who don't need that, the 1% who don't need more confidence, congratulations. But, we could always use more confidence. And was the goal of this session. And we'll look at some more. But let me show you the cost of not owning the knowledge and why owning the knowledge is going to increase your confidence and, mean something to your bottom line. So, somebody had known about the candlesticks, and they shorted on the shooting star, and they said, they got out at a loss, and the candles don't work. And I'm the first to agree the candles are not going to be 100%. But remember what I said before, candles are a tool, they're not a system. And he did not have the whole educational package. And let me show you why that's so important. I said this looks like a great short sale. There's a shooting star, so he got out here exactly the wrong time. Why do you think this looks like a great short sale? Is this shooting star confirming something else? And I'll give you a little hint. Great, good call. And be careful because, and this is, I want to congratulate you because for those new to candles, they're only going to focus on the candles without seeing if it confirms something else like a moving average or resistance area. So great call. And remember what we said on the hammer, if you buy in the hammer, your risk is to lower the hammer. If you sell short on the shooting star, your risk is to the high of the shooting star. So what that means is that to successfully use the shooting star, you have to be willing to risk to a move above the shooting star. What that means is, should he have still been short on that shooting star? And you should all resoundingly be saying, yes. I should be hearing that from even on the other side of the globe where I know a lot of you are. He should have been short. And this is what happened after. Okay, so after that, he got all our educational resources because he had my book, which really focuses on candles, but he didn't understand the importance of adding candles to Western technicals and stop-out levels and strategies. And this is what it's all about. Okay, trading with confidence. Okay, nice return on, using the candlestick information. But the idea with this is becoming confident. So let me show you, and again, based on your answers, your feedback, it looks like you're becoming very, very confident. We saw this before as a bearish engulfing pattern. Okay, you should all recognize that, right? I'm not even going to bother putting a polling question on. And here we have a bullish engulfing pattern. What should be support? The low of the bullish engulfing pattern. So if you sold short, and I think that was a great shorting opportunity because that bearish engulfing pattern confirmed resistance, this was a perfect place to cover shorts using the concept of the low of the bullish engulfing pattern as support. And look what happened after. So a nice $4 or $5 profit. Okay. So here, this is not, you see that blue arrow that just emerged? That is not a hammer. And the next blue arrow that emerged, that is not a shooting star. And I wanted to highlight this. We don't have time to go over exactly why these are not hammers and shooting stars. Just to let you know, there's more than just recognizing what the candlestick line looks like. Okay, and I wanted to show you this because if you traded based on the limited information here, you would have sold here and you would have bought here thinking this was a hammer and this was a shooting star. They're not. And once again, this, we don't have time to go into the depth exactly why that's the case, but I wanted to highlight this to show you that yes, we're going over the basics today, but there's so much more to learn. So even something with as basic as here. Here we had a hammer a couple of weeks ago. Again, these are all this month, folks. Classic hammer, it's okay to have a little bit of an upper shadow. Where would an obvious resistance area be? How about up here, right? Small real bodies. This is a pattern we did not have time to get into. This is a dark cloud cover. That's similar to a bearish engulfing pattern, but the black candle gets more than halfway into the white candle. So essentially, by using the candles as a reversal, and candles do not give price targets. Okay, keep that in mind. This is why you need classic Western technicals. But using something as basic as resistance, you would have looked at the hammer there, great risk-reward. Remember the importance of risk-reward. This would have been your risk. This would have been your target over here. All right. So in that scenario, again, this was just a couple of weeks ago, 6% in a couple of weeks with only a 50% risk. Okay, here in this stock, there were 2 candlestick signals here. Okay, what's the first one? And I'm going to do a polling. What's the first candlestick signal? Okay, there's actually 2, and we'll look at the first one. And as we're doing this, the question is, how do you measure risk? You go to the low of the hammer as your potential stop-out area based on a stop. And many of these candlestick signals, some can and some can't be used as support or resistance, but the hammer is one of them. And then the next candlestick signal, great. And then the next one, on this session here, what do we have there? What is that? Okay, what's the second candlestick signal? Okay, and it's okay for the opening and closing to be about the same. Okay, let's write a bullish engulfing pattern. So we have 2 signals here. Great call. Bullish engulf. So back-to-back candlestick signals. Again, you didn't have to be hit over the head with a hammer, to get this signal. And look at this rally. The market went from even if you bought in the bullish engulfing, from $65 to $74. And the goal is to be at the right time, at the right place, and more importantly, to know it, and then having the confidence to take advantage of it. Here you could have been pocketing $10 per share. And as opportunities come up, to have the confidence to take advantage of them. So let's briefly review what we've gone through here, and then we'll have some other things to talk about in a minute or two. We learned how candles can be used in all time frames in all markets. Very important. No matter what time frame you're trading in, you're going to be able to harness all the insights that we've looked at today. This is really important. Okay, because the candles, think about the hammer, the long lower shadow showing us the market's rejecting higher lower levels, the bullish engulfing pattern, the bulls are grabbing control of the market from the bears. This is why candles work so well. They show the psychology behind the marketplace. Knowing what not to do. One of the best ways to make money? Don't lose money. If a market makes a new high, Apple, right? 202, 204, makes a new high with doji spinning tops, don't buy. Okay. And we've only touched on some of the misuses of candles. For example, a doji in the middle of a trading range doesn't mean anything, but we did see how candles, candles should not be used by themselves. They should be added to other tools and so forth. Lots of traders are misusing the candles, so again, congratulations on coming here to learn how to begin to use them correctly. And this is what candles in context are all about. You can have a beautifully defined candlestick signal, but what if you have the hammer right at resistance? You don't buy it. Okay. East and west, the more signals we have joined together, the more likely a reversal. And this is what it's all about, how the candles are going to help improve market timing, to let you get the market signals before the other traders see them, before the market makes its move. Now, I'm going to ask you a question. Okay. Okay, what is your trading goal? Is it to become, and I'll read this because it's cut off, is it to trade part-time with more consistent and reliable profits, or to become a full-time trader? And I bet at least 50% of you are going to be looking to become a full-time. You know, think of the beauty of it. You don't have to answer to a boss, no commuting, no cost in gas. Yeah, and this is not surprising. This is exactly the type of feedback that we get, whether it's in my live seminars, in-person seminars. Most of you, some of you like your jobs and you really like trading part-time, and that's great. Whether you're looking to continue trading part-time or trade part-time at the end of the day or become a full-time trader, this education is your path to success. Now, can we all agree that the more you know, the more confident you're going to become? And who thinks there's much more to learn? Remember, we were only here about an hour. Okay. Now, if you think that it makes sense, that the more you know, the more confident and the better trader you'll be, I want to just briefly talk about our DVD workshop. It's over 6 hours long. This has my most important candlestick signals, and including my all-time most important candlestick signal. I'll tell you what it is now. It's the window. But I didn't have time to get into it today. I spend 45 minutes or an hour on it. I really think understanding just the window more than pays for the resource here. This has, now, my niche is candlesticks since I revealed them to the West, but I have my all-time favorite Western signals also. I've been using Western technicals since 1974. I can't believe it. And I show you my favorite candle signals. So I'll show you, for example, how to use candles in moving averages, candles in Bollinger Bands, candles, and I remember before I showed you change of polarity, falling off the roof, and so forth, candles in volume, candles in oscillators, and also trade management. We briefly touched on trade management. Remember we talked about risk-reward? This is one of the greatest misuses of candles. People forget about looking at using candles with trade management, looking at stop-out levels, when to pull the trigger, when not to pull the trigger. Do you realize you could have the exact same candlestick signal, say a hammer, sometimes use that hammer to buy, sometimes use that to lighten up on the long position, other times you don't do a trade on that hammer. How do you know what to do with that hammer? That's what the complete knowledge is all about. It's not just recognizing the candlestick signals, it's what to do with them. And this has 190 charts, all downloadable from the internet. And by owning the knowledge of the workshop, these are the benefits. Okay, you're going to be able to get these trading opportunities. Think of what candles do. They give you signals before the rest of the world sees them. Or, for those who think they know the candles, and misusing them, you're going to get advantages over those who misuse them because they're going to be trading exactly wrong. Learn how to avoid losing trades. As I mentioned before, one of the best ways to make money is not to lose money. Many of you know Warren Buffett's phrase or idea. There are 2 rules for successful trading. Rule 1 is don't lose money. Rule 2 is, altogether, don't forget Rule 1. And this is what it's all about. The reason I have the DVD workshops is because, and they are taken from my live seminars, is I really enjoy doing live seminars. There's not enough of me to go around. So as a way to expand the knowledge, of having, it's like having me. It's actually better than having me because at a seminar, you remember 100%. When you leave the seminar, how much do you remember? 100%, the next week 50%, the next week 20%. With the DVDs, you can review them over and over again. But anyway, getting back to this is what it's all about. And by owning the knowledge, the result is rock-solid confidence. There again, education equals confidence equals success. And, it's a lot of information. I know I went through a lot today, but if you like what I did today in the step-by-step progress session, you're going to get the same thing in the 6 hours. But don't let that overwhelm you because, first of all, you're going to have all the handouts on the DVDs, and this was really interesting. That I got this from a high school teacher. I happen to live in New Jersey also. It was a coincidence his high school is in New Jersey. And they used the strategies on that DVD workshop to win a state championship. And the reason I want to show you this interesting quote is because these techniques are simple enough that high school students can use them, but powerful enough that premier educators and analysts and traders like John Bollinger can also use them. I mean, what more do you want? Something simple but extremely powerful. And just to make sure you're rock solid confident, what we're going to do as a bonus is throw in, this is actually my favorite book. It's the Candlestick Course book, and I'll autograph it. And this shows you, you don't have to go through all the nuance, all the text here. But the main reason I'm throwing this in is the last section here. Maybe a little hard to see. I'll highlight it in blue because it has a test your knowledge section. And so the process is you watch the DVD workshops over a weekend. You make notes on the handouts on the DVDs, which you can get from the internet. Then you do this. You review the book over the next couple of days and take the quick Q&A in there to get you rock solid confident. And what I'm also going to do is have what we call our Nison Insider email hotline. Now, I know some of you, and I have to apologize for this, I know some of you have emailed me questions or our shop questions, and you get a standard reply, sorry, we don't answer emails. And the reason for that is because almost all the questions we get are answered on the DVD workshops. Also, I charge big bucks to answer questions from our institutional clients. However, for those who take advantage of this resource, those who want to make an investment in this resource, you're going to get a special email address that comes directly to me. And what that's going to allow you to do is ask me questions without a time limit on any topics on the DVD workshop. Let me say up front, I'm not going to answer questions, what do I think about a market, and so forth. But let me show you the type of support you'll get. And I actually really like doing this because it helps me also focus on what's important. So here, this is actually a question we got from somebody who took advantage of the DVD workshop special. And feel free to include a chart like this and make annotations on it, okay? If you send me a symbol, I'm not going to type in the symbol. You're going to have to send me a chart. But this is an actual question Gary asked me. So this happened to be an intraday chart. And Gary said on this, he had a bullish engulfing pattern at a support area. That's on this blue arrow here. Look at this great support area. Okay, again, this is an actual question, and this is something you're going to you can do, if you take advantage of the investment. He had a whole confluence, a bullish engulfing pattern, spinning tops, in other words, small real bodies, over here. He had a trend line breakout of price. See that blue descending resistance line? On that bullish engulfing pattern on the blue arrow, it broke above the resistance area. And Gary had asked me, was this a good trade that just didn't work out, or did he make a mistake in judgment that he didn't see? And what's going to happen is, sometimes you're going to have a good judgment, and the trade won't work out. What do you think I told Gary that he did wrong on this trade? And I'm going to give you a little hint. That would have been the buying price. Forget about volume. Forget about any of this stuff here. What is my most important trading rule? This is the horizontal yellow line is where we would have bought. This is his risk, folks. The lower the bullish engulfing pattern, we really didn't have time into getting, how to use bullish engulfing pattern support. This is his risk. This is the reward. Is that a good risk-reward trade? No. This is a trade he should not have done. And this is the idea of owning the knowledge. Two things. He had the knowledge of Western technicals and candles, but he didn't have the knowledge. I guess he forgot about, using the resources on the DVDs to think about risk-reward. But the point is exactly the type of question. Feel free to ask me at any time. So you have unlimited access to me. And nobody else does, really. So, just kind of bring it together before I turn it over to Bill for some concluding comments, and then I'll be glad to stay around for questions. And I really appreciate you staying with us. And somebody's asking me about another resource. Be real careful about where you get your other resources, because you're going to get burnt with the candles. No doubt about it. I don't have time to getting into that now, but there's a really nice comment from Johan, and I made reference to this. One of the great things about the DVDs is you can watch it over and over and over again. So don't let the 6 hours, and in fact I'll tell you how you can get 11 hours of information overwhelm you, because you're going to be able to watch it. And at different stages, I will guarantee, because I know this for a fact, I get feedback from this all the time, at different stages in your career, whether it's my resource or anybody else's, you're going to be able to watch it and get new nuances. It's like a classic book where you could read it, and I do this all the time. I read a classic book. I was 30. I read the same book. I'm 40 and 50. Different life experiences means different nuances out of the same book. The same thing here. Different trading experiences, you're going to get new nuances out of this. And remember, this is a one-time investment. Okay, and I really like this. This brings back to the question, how many of you are trading full-time or are looking to trade full-time? This is a great path or starting the path to a full-time trader. And this was really nice to hear from Johan about trading full-time now. So, again, this is what it's all about. Confidence equals success. Now, what's going to happen for those who want to take advantage of the opportunity, and we'll give you the pricing, and we only have a very limited supply, okay? We normally only keep a couple of boxes because we sell it for much, much more. And we only keep a couple of boxes, but we're going to talk about the special price in a minute or two because, again, I want to thank you for the time for coming here. But when you click on the link okay, to for that investment on the profiting. When you click on this link, let me go what this is over here, and I'm going to we're going to put this in. Bill will put the link in a minute because we only have 39 available. When you put this, here's the link. The retail price with the book, and I didn't even include the cost of my email address of Ask Me Questions, is over $700, and it's only $279, okay, for this investment. And think about it. You know, if you avoid just one bad trade or get into one trade, how many times over will this pay? Now, when you click on this link, let me give you a heads up. This is like day one of a 2-day workshop. And on a knowledge level from 1 to 10, it'll bring you to a level 6. This is perfectly fine for those who just want to really start getting, you know, a little bit more than halfway down the path of education on candles. This has my favorite candle signals and my favorite Western signals, and I touch on trade management. When you click on this link and you do order this, what's going to happen, and there's only going to be one time chance, you're going to get this page popping up. And what this page does is give you the opportunity to get my advanced DVD workshop. This is like day 2 of a 2-day seminar where I focus on trade management, intraday trading, the nuances between, very advanced and nuances between many of the candlestick signals. So this will take you to a level 10. I just wanted to give you a heads up on that. So for those who are perfectly comfortable just owning the basics of knowledge of 1 to 10, they'll take you to a 6. For those who want to go to the ultimate level, that's what this is all about. By the way, this advanced DVD workshop has all my Nissen trading principles. So here's the link, and with that, I will turn it over to Bill for a couple of concluding comments, and then I'll be glad to stay around to answer some questions. Oh, back to you, Bill.
Steve, thanks for an excellent presentation. I know everybody appreciates it. In particular, the way you clearly share your knowledge and make it readily understandable. And I know you carry that over into your course material. It's really very, very helpful. I just want to make a couple of comments that most of you will, I know this will resonate with you. Serious traders know that they're competing with the best traders in the world. And so you just have to have the knowledge to compete. It just behooves you to have that knowledge, and I just can't emphasize that enough. I deal with many newer traders and experienced traders alike who somehow want to get by with less than the knowledge they really need to compete. And so it boils down to two choices. You know, one is you can do it through trial and error, where you make all the mistakes yourself. It costs you years and a lot of money in countless false starts. This is a very common experience that most traders go through. Or you can take advantage of masters like Steve, who've got over 30 years experience. And when you do that, that'll dramatically shorten your learning curve. It'll save you a lot of time. I'm talking about years. It'll save you a lot of money.
But unfortunately, you know, we only have 39 available, so, you know, I didn't expect this crowd today. So, and by the way, congratulations, Michael, for taking advantage of this DVD offer. You won't, you know, you don't have to travel to take advantage of it. You know, one of the great things about the DVDs is that there's no hotel cost or anything like that. Let me just stay around for questions. And by the way, is my sound okay? Great, thanks. Okay, now, a lot of the product-related questions, for example, we have a Forex DVD workshop. Just let me give you an email to shoot Paul. And if you are interested only in the advanced DVD workshop, send Paul an email. Okay, and here's Paul's email address. Okay, and we do have a Forex DVD. It's not the same price, but you could ask Paul about that. But keep in mind, pretty much everything on this DVD workshop can be used in all the markets. And if you do want to get the advance, just email Paul. Okay. And okay, so I'll stay around for some questions. If the web page is not working, it might mean we sold out already. Okay, so that's sometimes what happens. Or if we get so many orders at once, it just gets overwhelmed. And speaking of orders, congratulations. Joe, for taking advantage of this. One of the nice things is in the invoice, you'll be getting a special email address. As I mentioned before, the email is only for those who take advantage of this special workshop. So congratulations on being one of the 39. But if you order after the 39, no, that's when it's gone. It's gone. For those in Australia, we ship them out on Monday and Tuesday. Keep in mind, overseas, we get them out very, very quickly. The challenge is it then goes to customs, and that's beyond our control. So, but with that, I want to thank you, and may the candles continue lighting your path to greater profits. Okay, now I'll stay around for some questions. I just wanted to end our recording. Okay. All right, Steve, how do you use a long-legged doji? And again, let me put the link in here for those who want to take advantage of it. Okay. A long-legged doji is a doji with, and let me draw it here. Okay, I'm going to use the whiteboard here. Whoops. It's a Picasso. Okay, a long-legged doji is a doji with very long upper and lower shadows. And actually, I talk about this in my first DVD workshop. It's actually called a high-wave candle. And a high-wave candle, or in this case, a long-legged doji, think about what the doji represents a balance between the bulls and the bears, making a little equal sign over here, big equal sign. But what the long-legged doji is showing us, the market is really confused because you have that long upper shadow. The market's rejecting upper levels, right? It sells off, and it goes down here. But then what happens towards the end of the session? It bounces back. So essentially, with a long-legged doji or high-wave candle, the market rallies, it sells off, it sells off, it rallies. The Japanese would say with this particular candlestick line that the market has lost its sense of direction. So it's a good indication the prior trend is likely to reverse. Okay, can you, let me go through here. Okay, for the advanced course, contact Paul. For those who already have my first course. Okay, contact Paul. Okay, and here's his telephone number. He probably is not in today, but, okay. And you'll get special pricing on that. It won't be the same price as it would be if you purchase this and the profiting. This and the advance, but it'll still certainly be a special price. Again, as a thank you for taking the time to come here. Okay. Again, any questions on any of our products, just contact Paul between the Forex and the other DVDs. Okay. And Colin, contact Paul about your questions about other aspects about this. Okay, what's my favorite indicator to enhance the candlestick chart? I have quite a few of them, but really just one of them out of the few of them is just simple support and resistance. Horizontal support and resistance. Not angle trend lines are fine, but to me, everybody's looking at the same support and resistance when you're looking at horizontal support and resistance. So to me, that's one of them. Again, there are other ones I talk about on this resource here, but I really like horizontal support and resistance. All right, Patrick's saying, and this is a good point. Again, we didn't have time to go through the nuances. A bullish engulfing pattern or bearish engulfing pattern need not wrap around the shadows. It's black real body. It's real body wrapping around the white real body. Congratulations, Jack, for taking advantage of the DVDs, and I think we may be sold out already. But anyway, the engulfing pattern is when all that need happen is real body wrap around real body. It doesn't have to be a shadow around shadow. And Christine, can you just do the question again? Chris, I have hundreds of questions since 11:21 a.m. She's asking me to look at a question since 11:21, and I just have hundreds of, it's not hundreds of questions, but every time we asked if we could hear us, everybody typed yes, and there's 700 people on the line. So, unfortunately, what 700 means is that I can't do the math. Maybe only 1 out of 20 will be allowed to have the DVD workshop. Sorry about that. Okay, would you recommend using candles for day trading on a 1 minute period on stock chart? And the answer to me, I personally think no. I would use candles, but definitely I would use time and sales. And if you're trading intraday, my advanced DVD workshop has a whole section on intraday trading. And the reason I mention that is what you could do is use support resistance on the daily chart, and then use the intraday chart to get signals. Now, Pat's mentioning he's paying $578. The $578 is if you buy both DVD workshops, you get the complete mega package. Okay, Pat, if you're interested only in the first half of that package, okay, contact Paul at CandleCharts.com, because this is $279. But if you want the whole mega package with the, let me go back here, with the advanced DVD workshop, that will be $578. Okay, by the way, the list on both these DVDs is over $1,390. Okay, how do you determine risk reward? Your risk is your level that you're willing to risk, your stop out level. For example, the low of the hammer should be your risk. Your reward, I look at just recent highs, pivot highs, but your reward, your potential target might be something different. You might like moving averages or trend lines and so forth. Okay, I don't use moving averages. There's a lot of strategies I don't use, not because I don't like them, it's because there are so many indicators out there. And through the luck of the draw, I've been, I just focus on a few of them that I've found that really work. But I don't use moving averages. That's not to say moving averages don't work. You may find in your market, the Japanese say the personality of a market is like a person's face, never two alike. And you may find a particular moving average works really well in your market. Stay with it and then add a candle signal. So let's say, and I'm just picking out one because when I do advisory service for my institutional clients, they'll send me the moving averages they use, and a popular one on stocks is either a 30 or 50 day. So let's say, use a 50-day moving average and you have a hammer confirming it, as support. Again, that's the east and west. Okay, and let me give you Paul's phone number again. I'll say it aloud, 732-416-9407. And be sure to call him in the middle of the night. Just kidding. Okay, good question. Does a failure serve, does a failure of a candlestick signal serve as a signal in the opposite direction? Actually, yes. For those, once again, there's a lot of really cool things you can do with candles beyond the scope here. But what you can do is, let's say you have a shooting star and the market closed above the shooting star, and you're a momentum player, you could go long. In other words, you could buy on strength. Candles are great when you know how to use them for momentum trading as well. In other words, if the support or resistance area is broken, you could then go in the opposite direction. Great point. Okay, I'm just going to take another 5 minutes for questions. Okay, Shah is saying, how long before see the knowledge working for you? What I would do, this is the steps I would take, Shah, and generally for anybody who's going to take advantage of this investment. Spend a weekend watching the DVDs. First print out the charts. All the charts are downloadable from the internet, so you have notes in front of you. Watch the DVD workshops, okay? 6 hours, you can do that over a weekend. Then spend the next couple of days going over the book, the free book you're going to be getting. Do the Q&A with that. Then it depends if you're a new trader or not. If you're a new trader, what I would suggest is start paper trading and use the techniques with the paper trade. If you don't have access to online, paper trading, print out a chart. Say go back a few months. I'm picking a chart here. Google, okay, or Apple. Let's say Apple. Print out the chart. Go back 3 months. Don't look at what happened recently, and print out the chart. Hide the recent action. Move the paper. Hide the chart. Move the paper over one candle at a time. Say to yourself, what would you do here? Would you buy? Would you sell? Why or why not? Now, and then get a little bit more confident. Then add your Western signals to confirm that. Then what you could do for those who get the advanced DVD workshop, what I would do a little differently. I'd watch the first DVD workshop over the weekend, take the quiz with the book, the Beyond Candles, spend the rest of the week doing that. Then the next weekend, watch the advanced DVD workshop, take notes on the advanced DVD workshop also has some cool, there's about 25 test your knowledge charts in the advanced DVD workshop. Take those quiz charts in the advanced DVD workshop and then do the same thing with either the paper trading or, hiding the chart. Okay, it depends. Charles is saying that his color charts are different. It doesn't matter. They give red and black. It doesn't matter the color. Some of the charting packages might be green instead of white. It doesn't matter. Okay, do the results change if you use different platforms? And the answer is no. When you're trading equities or non-forex, because it's an actual market, there's you have opening and closing prices. They should be exactly the same. There are some nuances in forex. Different platforms may have slightly different signals. So that's why I'm a little bit more flexible. One platform might be a doji, another platform might be a spinning top or a small real body. So I'm a little bit more flexible with the candle signals on forex than I am with non-forex. Okay, Kristen's asking hammers and shooting stars. Do I ignore the short one? Now, to me, a short. I guess what you mean, Kristen, is if the upper shadow is not at least twice the height of the real body, it's not a shooting star. If the lower shadow is not twice the height of the lower shadow, for a hammer, if the lower shadow is not twice the height of the real body, it's not a hammer. And by the way, the upper and lower shadows should be very, very small. If you want an exact number, on the hammer, the upper shadow should be 10% or less of the lower shadow. And for a shooting star, the same thing. The lower shadow should be 10% or less of the shooting star. I was asking about the DVD course, the Forex DVD course. If you're trading Forex DVD and you have only Forex and you're only trading Forex DVD, you're all set. If you also trade equities, you may want to think about adding this again because this is a little different. But if you're only trading Forex, you're fine. Okay, Grant's asking you can order on Monday. It's going to be noon tomorrow. We may extend it a little bit. I'm not sure because we had some audio issues, but that might be moot because it's not only the time frame, but it's how many we have available, and I think we may be sold out already. Okay, again, I see a lot of questions, but a lot of them are really not related to what we're talking about here today. Great. Okay, so again, I want to thank you very much, and again, not only thank you for attending, but congratulate you for recognizing the value of education. And this is what we did here is all about. Obviously, what Profits Run does, and what this one-time investment will do for you. Again, education equals confidence equals success. And to me, the one word, if I have to leave you with, that'll separate the successful from the non-successful traders is definitely education. So, thanks. Have a very good weekend, and look forward to seeing you down the road or working with you again. Thanks a lot.